in our market, you're able to charge anywhere from $800 to $900 a bedroom. And if I were to go towards a multifamily, let's go with a 2-bedroom, 2-bathroom unit. And we can compare that to college in this market. A 2-bedroom, 2-bathroom in this market would probably rent around $1,300, maybe $1,400 in our market, where I can pull somewhere in the neighborhood of like $1,900 from college students. So
this is episode number 22 of the Multifamily Success Stories podcast. Would you like to turn vacant units into cash and earn up to 3 times more per door without having to do any extra work yourself? We offer fully managed short-term rental solutions for multifamily investors. Go to managedbylux.com for more information.
Hey, this is John Bell
and Julian Sage,
and welcome to the Multifamily Success Stories podcast. This is a show where we talk to multifamily investors about their journeys and starting and growing their real estate empires.
Our goal is that you'll be able to walk away not only inspired, but with practical information to help you in your real estate journey.
Since we are a new show, please go over to iTunes and leave us a review and let us know what you enjoy.
And if you haven't done so already, go on over to our Facebook group, the Multifamily Success Network, to connect with the community. Hey, what is going on, Dealmakers? Julian here. And in this episode, I had the special honor of speaking with Nick Simpson. Nick is the founder and CEO of Simpson Building Enterprises, a multifamily investment firm focused primarily in student housing in the Salisbury, Maryland area. Simpson Building currently has 100 units and around $50 million of assets under management, with another 86 apartments under development from ground-up student housing. In this episode, Nick shares his experience of starting and niching into student housing from single-family to larger multifamily, switching to commercial real estate and the lessons learned, and what it's like raising capital and working on new development. If you like my show notes for this episode, go to multifsuccess.com/EP22, or if you like my show notes sent directly to your inbox every week, then go to multifsuccess.com/show notes. With all that being said, on to this week's conversation. Hey, welcome back, Dealmakers, to another episode of Multifamily Success Stories. In this episode, I have the special honor of speaking with Nick Simpson. Nick, would you please introduce yourself to the Dealmaker community, let them know who you are and what inspired you to get into multifamily investing?
Yeah, I'm a real estate developer in Salisbury, Maryland, and got into multifamily over a period of time after kind of getting into some commercial and smaller rentals, and just saw the economies of scale really working in our favor, and always wanted to grow a real estate portfolio, but kind of with experience, I've decided that multifamily is the trajectory and the lane that I'll stay in.
Can you take us back to the beginning? Like, how did you even kind of fall into the space?
Yeah, one house at a time. It was one very, very, very small house in Salisbury. We were coming out of the recession, bought it for, I think it was $30,000 or something, very, very modest, and put a lot of sweat equity in. The total deal was maybe $70,000 all in, and I rented it out to college kids, and it came with an extra lot, and I sold that to the contractor actually who helped me, worked on the house, and was off to the second, third, fourth, and just it got the bug right away. So
nice. And what kind of sparked that fire? Were you just like looking at what everybody else was doing and saying like, hey, I want to flip homes and turn them into student housing, or like what put you on that trajectory? Because right now you're doing student housing just at a much larger scale.
That's right. Yeah. So starting out, I've always had a passion for business, and I didn't really come from a family who was going to give me they weren't going to pay for my college education. And, I had a great family. It's just, we didn't come from some of the means that other people do. And I started cutting lawns really early on, and that was a nice little business, and it paid for my college, but I was always hungry for something more. So I started reading, and like many other people in this industry, they read Rich Dad, Poor Dad, and that set me on the real estate trajectory. And I figured what could I lose with a small investment? And at least I could try. And worst thing that happens is I lose a little bit of money and go in a different direction. But after I started one, it was like, this works. And then, lessons learned, you keep moving forward. And sometimes you get burned and you still have to lose money every once in a while, but it gets farther and fewer between as you get more and more under your belt.
So you actually, I think I read that you actually funded your college with your lawn care business.
Yeah. So I cut a lot of lawns when I was a lot of grass. So I ended up having a I don't know, like 12 people or something like that working for me as a senior in high school, doing like all this landscaping and mulching. And we were doing a lot of work, and that was enough to put away to go to college. But because I was paying for it and I was writing those checks, I was out in 3 years. I was like, let's get this done and over with. And I used that savings from the fourth year, and that's how I did a down payment on my first house.
So why not just keep it up? I mean, you're scaling a business, which is, you're doing it for multiple years. You overcome a lot of the obstacles with even starting a business. Why not just keep on with that? Like, why get into flipping homes for student housing?
I've always wanted to do something big. The dream is to build skyscrapers. I want to build really, really neat communities and, spaces that it's just something I'm inspired to do. It's nice to work for something I feel is going to be bigger than just me. And while cutting grass, you can make a lot of money. In a landscaping company, you can make really great living. I just felt like I wanted to do something a little bit different, a little bit bigger. And that's how I got into real estate.
And what I mean, obviously it takes a lot of skill to be able to grow a team and manage that and keep that running, build a business. How did that translate over to you growing your real estate portfolio?
People is probably one of the hardest things in all businesses, and managing a team is difficult. And there's a lot of people who will who can get in your way and kind of burn you early on, whether it be a contractor or people who just say they have a certain type of skill set and they don't. We had to learn how to get through our bookkeeping and all these different things you have to learn. But I wouldn't have learned unless I just put myself out there and just made one happen. So, and I did it on a small scale. It's not like I was doing it on, a building like I'm doing now. Those bookkeeping skills or learning who the good contractors are, all those things happened on smaller, more manageable levels. So I don't think there's a magic pill to it other than, reading and talking to people like this and listening to podcasts. But you got to do it. And that experience can really be valuable. But when you find those team members, that's when you want to hold on to them. You want to really try to keep them around you and quality people. And, I think it's also nice to have, friends in the business. Hey, how did you handle this situation? Do you have any contacts you can share for here? Who did you get a loan from? Is there, those little texts can sometimes go a long way with a new deal or making problems go away.
How that first deal that you said, you said that you had some learning things, some challenges that you had to overcome. What were some of those challenges?
The first deal, that's everything. I don't know. I didn't even know how to do a lease. But I was as green as you get. I mean, there was just a drive to do something, and we made it happen. But I think once I kind of got my, kind of cut my teeth a little bit, I definitely learned that one property at a time, at least, and the house is a lot of effort. I mean, you have to go through all of those bank, things. You have to get each renovation done. It's just a lot of time. And that's where I kind of started scaling up to the, 5 units, or for a while we were getting into commercial, and now we're working on like an 86 unit property. There's a lot of time involved in that pre-planning. And I just decided, it was time to grow bigger, and it also fits with the goal of down the road. So
on that first deal, you were pretty much fresh out of college yourself. Did that have anything to do with your exit of basically 2 college students?
So this market, in particular, Salisbury, one of the highest rents you can get is from students. So I was like, well, let me try to maximize my return here. I'm willing to deal with college kids. Yeah, so what? They beat up the walls. I'm not afraid to, do some drywall repair, go fix a toilet. And so I focused on what was paying me the most. Multifamily is certainly a very strong business here as well, and we'll be doing that regionally, and hopefully getting down into the southern markets over the next few years. But as far as how I got into student housing, it was just mainly knowing my market. It was what pays.
Are there any? So you said that you started off with one property doing student housing. Have you been doing student housing this whole time, and you've just scaled from one single family to a smaller multifamily to now you're doing development with student housing?
Yeah, so we've had student housing in the portfolio the whole time, but we've also had regular multifamily. We've had, for a while, we were thinking maybe we'll get into the office space, the small kind of tenant fit out properties. Again, a lot of work. You have to find that person. You have to do the build out. For each individual property. You got to find. It's just a lot. So that kind of kept drawing us back towards the multifamily. And certainly with the onset of COVID, I have sealed the door to the commercial side. And even the I guess the appeal of the hotel industry has kind of diminished for me significantly, because I've just watched some folks get hammered with what's going on. So student housing's always been a part of it. Multifamily's kind of worked its way in, and not every market is fit for student housing. So we want to make sure we have a robust multifamily as well.
Do you think that things are changing for student housing, especially right now, like with everything being so remote? Looks like a lot of college campuses are, maybe reducing staff or, going virtual. Do you see that having any impact with students moving to campus or doing things from their home?
Long term, and on our project, we're working with American Campus Communities. They're the largest in the nation. And we're fortunately working with really strong people over there who can give us access to the data. And that data really doesn't support a major change in the industry. For instance, even during COVID, they've had a 94% occupancy on their sophomore, junior, and senior housing, which is a clear indication that I just want to be out of the house. I don't want to be with mom and dad if I got to be stuck. I don't want to be at home. But we have seen some changes as far as the way things are going to be built out. There's going to be more outdoor spaces. There's probably going to be less carpets in the bedroom as far as cleaning. There's maybe going to be more filtration systems put in, or sanitizing stations. And really, it's an operational thing. But as far as the college experience goes, I don't see strong universities in good markets that are well priced going anywhere. I think there's going to be a need for that. Maybe there's going to be the kids who decide to go online, and maybe they decide $50, $70, $80, $100,000 is too much for a year of college. I happen to be in that camp, but there's more affordable colleges that are maybe affiliated with the state or have a really good endowment. I don't think they're going anywhere.
So you said that you were doing around 5-unit multifamily for student housing, but then you transitioned to commercial. What was the reason for that?
It was just opportunity. I had a business partner who was a good commercial real estate agent who was able to get them leased. And so we were finding properties in the area that needed renovations, and we were able to do residential renovations. So we figured, why not do the commercial ones? It's basically the same. We do a lot of heavy lift as far as the commercial, or as far as the construction is concerned. And it was just an opportunity. And that was a lack of focus, something that I've learned. I'm glad I did it, but because of the lesson learned, especially on a small scale, I could only imagine if I had kept going and I had a couple 100,000 square feet of office space and I'm just sitting here in COVID trying to get it leased, that'd be rough. But I had just shifted because I felt like, I can handle all these different asset classes, but it's a different animal altogether. It's different property management, and really it's a different financial model. You really have to know your stuff if you're going to try to do both.
Is it a pretty different type of investor? Like, what are the types of investors that you deal with when trying to renovate or you do commercial as opposed to student housing?
Yeah, as far as the investors are concerned, I think we've seen a push towards the multifamily. They feel more comfortable with housing right now. As and that was before COVID too. Like, everybody kind of had that e-commerce, like, dread that was coming, and they were just like, retail or even office space, maybe this isn't needed. I think just COVID highlighted what was already happening. And so we've already seen investors kind of pushing towards those multifamily. So those commercial properties were more, self-funded or just on a small scale, and maybe with just a few other investors that just wrote larger checks and had a little bit more control over the property. But it was, it's not something that we've been fielding calls like, hey, go find me a, 20,000 square foot or, 45,000 square foot building where we can lease it up to tenants. That's not where I found the investors are interested.
So going from smaller multifamily to commercial, and then did you jump straight into this larger development?
Yeah, I've done a lot of projects along the way. This was kind of organically developed. I did a couple 1031s out of projects. I wanted to consolidate some of that smaller stuff from earlier on that we had talked about, and rolled it in and invited investors to come in. And now we're working on a larger project and have a couple other multifamily deals that we're working on in the pipeline for 2021. But yeah, it wasn't as seamless as you're saying. It was more organic growth into something that was a bit larger. So, I didn't turn the lights on and go, okay, 86 unit, 300 bed student housing. Here we go. Yeah, it was definitely a little bit more of a slow growth type of thing.
What does that entail? Like, how much more involved is it to do this new development as opposed to what you were previously doing?
Tremendously different. It's for development properties. Obviously, it's a higher risk, higher reward type of situation. It's all the way from zoning and architects to, having bankers come in for like bridge loans, and we're even working on a tax credit for this. And then, I've played lobbyist. I've done kind of a lot on this project. I think development in general has a lot longer timelines than your traditional multifamily deals. And I think that's why some investors are looking for those quite robust returns. Is, they want those IRRs to be quite high. Fortunately, we're looking and targeting for investors who are really focused on just a cash on cash long-term hold. So those are different type of investors who don't need to be in and out. And those type of people, I think, really get it. In my opinion, why work so hard to have a property that you source it and you find it and that it's a great one, and then you turn around and sell it for a quick buck? Or over the long term, I feel like our investors are looking for that residual type of income.
Did you have any experience with this type of development before?
Yeah, so we've done a lot of different developments, and as far as going to a 12-story building, I partnered with a gentleman who has done many of them. So it was using different skill sets, and he owns a construction company that has a ton of experience. He's got a ton of employees with just giving the construction, checking that box as far as the construction is concerned of a really large property like this. As far as as far as like the renting outside, that's pretty much the same whether you're 20 units or 80. It's finding the right property manager, whether it be in-house or in this case a third party, to make sure that it's run really well.
And what is the timeline look like for new development? A lot of the listeners of the show are probably looking for those light cosmetic things. Just looking for a multifamily that they can fix up and be able to increase rents. But for you doing new development, you said that there's a lot more process involved with zoning. You said you also had to do some lobbying, and you also have to raise money from the investors. What does a timeline for this type of development project look like?
Yeah, you could be, the bigger it gets, usually the longer lead time. A lot of developments can be easily 1, 2, 3 years to get something off before you're even starting. Then you have the construction period. Most of the time, the developer, like in our case, we have to de-risk the project a lot. We have to put a lot of our upfront money in well before an investor is going to be coming in, because they're not going to take a speculative run with you. They want to know that the project's really got some legs. So we have to go in, we have to buy the properties, or at least get options on the properties, really get our entitlements in place, make sure that it's truly a feasible project with the construction cost, and getting some architectural drawings done, and making sure that your local governments want to see the project happen, because they can make your life very difficult if they don't. And all of those things might be the reason why a lot of investors are just looking for that cosmetic. Now, on the other side of that, you can really make something great and have a really high return, as long as you're conservative with your underwriting.
I mean, how are you able to, because you said that you have to put a good amount of money in, like how much do you have to personally commit as far as like money and time into a project, when you could be, focusing your time and, efforts into, doing these lighter cosmetic works where maybe you're able to start generating some cash flow a little bit sooner? Like how is a person that is maybe getting into the space supposed to be able to do development if they don't, if that's maybe their only project that they're working on?
Yeah, if it's your first one, I would think that you're going to want something that has a short couple month timeline if you're going to do some kind of like construction work to the project. And maybe ground up is just do that one down the road. If you're going to do something with a lot of work, I would come in, I would do the countertops, the paint, the baseboards, maybe a new front door or a new roof, or something that's like just a couple of months worth of time. I would definitely not, if somebody's going to try to do this, I would not try to steer them into into something that takes a lot of lead time. This is a lot of money up front. I mean, you're talking millions and millions of dollars up front before you're even putting a shovel in the ground. So something that for a new investor, I would want them to have a lot of success and really enjoy their first investment. I would steer clear of ground up or something so heavy like this early on. That's just my opinion, of course, but that's what I would recommend.
Nick, I believe you might be the first person that we've talked to that does actual student housing. Typically, we don't get into numbers or anything, but if you could you give us a breakdown of what the numbers look like versus just a traditional tenant, and why student housing, of course, is even something really great in that market? I know it's a college town and everything that way.
Sure. So there's a couple things to point out here. One, it's purpose-built student housing in a lot of cases. So we have a 1-to-1 bed-to-bath ratio. So each person has their own bathroom, and you're usually putting 4 bedrooms in an apartment. And that's obviously a different type of unit to a multifamily unit. So you're kind of gearing it towards the kids and making sure that they are having the best experience possible, but you're also kind of committed to going down that path. Now, as far as that's concerned, in our market, you're able to charge anywhere from $800 to $900 a bedroom. And if I were to go towards a multifamily, let's go with a 2-bedroom, 2-bathroom unit. And we can compare that to college in this market. A 2-bedroom, 2-bathroom in this market would probably rent around $1,300, maybe $1,400 in our market, where I can pull somewhere in the neighborhood of like $1,900 from college students. So it's a little bit more lucrative. Turnover's higher. Management's a little bit more hands-on. We have to pay some of their bills for them. It's just slightly different, but that it's definitely worth the quote unquote headaches that some people are talking about in the right locations. Before people also get into this, I think it's important that they check with zoning. A lot of places don't let you just stick 4 kids in a house. So don't just assume. You have to really do your homework. We can't just buy houses around here and stick 4 or 5 kids in them and just jack the rents up and make a killing. There's zoning laws against that sort of thing. So definitely something to check on. And yeah, good question.
And you're also furnishing these places, right?
That's right. So it's a fully furnished, kind of a just bring your books and kind of move in type of thing, just your personal stuff. It helps with the property as far as like the damage to the property. That's one of the big benefits. If you have every single year, let's say 60% of your kids moving out, that's a lot of furniture. coming in and out of your property. So typically we like to furnish them. We give pretty robust furniture, maybe not something that you would have maybe a little bit later in life, but something that you can wipe clean and can take a take a beating, if you will. So yeah, we furnish them, and certainly I think the trend in the market has been going towards those all-inclusive properties as far as students are concerned.
You mentioned single family and putting a bunch of college students in a single family home. Why? What is the real difference in maybe return or that effort that you have to put in? Like, wouldn't it be easier to just take a bunch of single families or, smaller multifamilies and turn those into student housing as opposed to like the 3-year time span and multi-millions of dollars that goes into new development?
Yes, on a smaller scale. There's like a point where you reach, it mainly comes down to management. And I want the management to be on site and to be able to really give that really quality experience to the students, while also, uh, having like a nice website and just really nailing the details. And if I have those properties spaced out all over the place, that's when you don't have a centralized management company. It's just a little bit different play than multifamily. That's much more acceptable in the multifamily world, and that's a good business model. But I wouldn't convert them to student housing, because then you have um, kind of a housing. It's just a different business model, and there are people who make money at that. So it's just not for me. But that's it's definitely a possibility.
What type of investors are looking to do like new development, student housing? Are you pulling from the same type of investors that would be looking to do like larger multifamily, or are these like types of investors that are kind of on the fringe? They're doing different types of creative type of investing.
Almost everybody who's willing to do a student housing will do a multifamily. I mean, that's just about everybody in the industry, especially right now. If you show them a quality multifamily deal, there's investors for it. Student housing definitely cuts down on the prospects, just because people don't understand it as much. Certainly, though, there is a niche of investors out there who really get it, and as long as the right management is in place, they see the higher returns as a good vehicle for their investing.
What what were some of the with this type of new development raise? Like what how much did you have to raise, and did you have like a lot of experience with trying to raise for such maybe a large amount?
Yeah, so that's a great question. So no, I have not raised this much before, but it's it's similar to raising smaller amounts. Uh, I found that once you get, let's say you're trying to do like a $1 million raise, a lot of those are, you're not going to raise a lot of that from private equity firms. But once you get kind of past that 5 million mark, there's certainly a whole new world of money available. Even that's kind of on the small end for the private equity world, who wants to place 5, 10, 20 million. Now you got to earn your right to getting there, and they want to know what your past experience is. And that's where a lot of my partners come in. I don't shy away from partnering with people who are have decades of experience and very strong balance sheets to help the company, and we all bring our different skill sets in. But as far as raising capital for a larger scale project, certainly we focused on uh, larger check writers in this particular case, because we wanted to have partners who had a bigger say, at least on this particular deal. And other projects will have more limited partners, and then you're raising it from a larger syndicate of people. And it all comes down to the numbers. And really, as long as they work, there's investors out there for it, and it's not a crazy different. And once you get a good reputation, you really pay people back on time. You're honest over and consistently. You're not trying to pull a fast one. You always answering people quickly with emails and phone calls. It just builds a reputation, and you can start to raise it faster and faster. But there's no shortcuts.
What what was the most that you had raised for a previous deal prior to this one?
I I don't know, a couple million. And this was a little bit of a step up, but as far as the difference in strategy, we shifted, towards those uh, larger groups. We've tried out brokers, and some are really great, and some are not. Some are just going to sell you sell you a bill of goods. So really be cautious when somebody can promise you this magical land of money that does not exist. As long as you have to, it, you know, I've also shifted to talking with more people like you guys, and you tell them your needs, and we all start to work together. I've definitely tried to share my contacts. Like if something doesn't work, I pass it on to the next person because I know that'll come around to me, in the future.
Can you kind of talk about maybe your evolution? I mean, with the capital raise, there's got to be maybe some, you contact maybe your previous investors, but then after you've maybe exhausted that, now you're like, okay, now I'm looking at like, private placement agents and stuff like that. Can you kind of talk about what your process was like for being able to raise the funds for this round, and how much did you raise for this build?
Yeah, this will be all in, including our equity of about 2 point. We're going to put about 2.4, and so total equity be around 10 million, so 7.6. So,
Okay.
the as far as the evolution, I used to work with obviously just those like friends, family, and investors that I had worked with previously, and shifted towards calling. Doing a lot of there's definitely cold calling involved, and working with some of those placement agents. But nobody works harder than me as far as my projects are concerned. Just like nobody's going to work harder for you on your project. So I got rid of all that noise, and I just do it myself. And I think the investors who are giving you their hard-earned money want to know who is going to be working with it. And in our projects, I want them to know me. They're going to have my direct contact information, and I that kind of evolution of getting more personal with it, I think, has really paid dividends. And getting to know the people, and if it's not a fit, not forcing it, just putting them on the list. And I know there's a whole slew of people I can go to on my next one, for multifamily, and maybe it's not a fit for that one, but I'll get them one day, just slowly but surely. So
Nice. And what was that? What was that transition like? Because you said you were dealing with smaller investors, but now you've been focusing more primarily on larger, higher net worth investors. How did you tap into that network?
that's tough. That's that's just a different strategy. So at first, I was thinking maybe I'll just go wide, and I'll raise small amounts from each investor, and that's a great strategy for some people. Uh, and I certainly will explore doing that on our future projects, but it's just not our setup right now for, probably for the next couple, year or two. We're going to focus on a smaller network of people. If I needed like $100 million in equity, you gotta really kind of go far and wide. But for our projects, we're not draining the wells of the people we know too fast. And uh, one or two really well connected people tend to put you in touch with many more well connected people, and one after another, and you earn their trust. So it just takes time. That you just got to keep calling, and there's plenty of times you get frustrated, but as long as you believe in what you're doing, you'll get there.
Do you feel that I don't know how involved in the multifamily community, but I feel like, and this is maybe just my ignorance, but I feel like a lot of people are trying to maybe pull from a lot of the same people within kind of the same communities. Did you feel that maybe within the multifamily space, a lot of the people are kind of working within the same group, and that you had to find networks outside of the community that are maybe active investors and trying to scale themselves?
Yeah, that's what I think I learned from like early on. you, I've like heard some of the kind of the smoke and mirrors from people who really they're not really doing anything major. They're like, oh yeah, there's this honey pot of money out there that you'll be able to tap into, no problem. And it's just not true. You have to earn that over a period of time, and it's okay to go I know everybody's the buzzwords, let's go super fast, let's 10x it. That's great. I can appreciate robust growth in your business, but taking time, making sure you're building relationships of your own, not just relying on other people. And I think it just takes. I think it just takes putting yourself in those networking groups, getting on. Certainly this year has been really rough for like conferences and stuff, but those are really great for meeting people and putting yourself out there. People also kind of expect you to be networking at those events, so like handing cards off. And I think to answer your question, yes, I did have to kind of go in a different trajectory than what the other people around here were doing, and that's okay. It's because there's a lot of people out there.
And you brought up earlier that when you're trying to talk to institutions for raising capital, you said that they typically shy away from anything less than 5 million. Is it really just like a dollar amount? Like once you reach past that 5 million, that people start taking you more seriously, or can you not, if you had a really good deal, present something that is of a lower raise?
You absolutely can present anything with a really good return. That is first. It's not this magic 5 million. I think it's kind of more of a guiding post for a lot of these groups. I've been told, hey, we only placed 15 million and up, or we only placed 10 million and up. But I'm sure if you were to show them a really, really quality deal, they only had to place, 6 million, I'm sure they'd probably look at it. But it really comes down to their overheads, and they have to make enough money on each deal to cover their overhead, and they're just in a certain lane. They might have brought in really large investments from family offices, or maybe they've gotten some like insurance money or whatever it might be, that they have to place a large amount of it, and they have to do it relatively quickly. So they try to just fit into their original stated business model, which they promised their investors. And if it's not a fit, call the next guy, because there's a lot of them.
And where are you finding all of these people? Is that just from your network, or is there like a list? Or are you doing cold calling?
All of the above. I mean, there's a lot of warm connections from, you can have certainly that when you have a warm, friendly, hey, like, if you were to say, you were to show me a deal, and, I thought that looked really good, and I just didn't have a fit for it, and I passed it on to the next person. That's a much warmer contact than me just, hey, I'd like to show you a project. But yeah, I've done cold calls. I've done it all. And I'd say on this deal, it was more of a warm contact that got it done. But I was certainly hitting the phones before that, cold calls. I was looking on LinkedIn, just searching online. I mean, it takes time. There's no magic to it. You gotta put the time in, and I'm talking hours and hours of scouring and looking for the right people.
Is there a different type of way that you have to present to institutions, as opposed to if you're raising money from, just an accredited investor that may be higher net worth, as opposed to institution?
Usually numbers driven, as far as institutions are concerned. They're going to look at who you are. That's certainly part of it. But the numbers are going to just drive the whole conversation. They're going to stick it into their model. They're going to make sure that it works and meets their return metrics, and that's the starting point for them. And as far as the high net worth guy, he's or girl, individual, is looking for tax shelters, and maybe has a long term approach towards business, and they just want to get some of their money into real estate. Typically, they just want to know who you are, and do you have some of your money in the game? And as long as they see that they're going to make a decent return, usually with high level numbers, then those, they turn into investors. So I think the sophistication level definitely increases, and if you're calling institutions, you better really, really have a reason for every number.
What do you see? What has been maybe some of the biggest challenges that you've had to overcome, that you've really learned, like, hey, I need to change my business?
It's a great question. Like recently, or are you just overall in general?
Yeah, let's do recently with everything that's happening.
Yeah, as far as COVID, I think it's really highlighted the multifamily direction for me, and staying super conservative with our investments. And when money gets free flowing like it is right now, we have low interest rates, asset prices are definitely rising. We never really saw that depressed pricing that we all thought was going to come into the market during COVID. And really selecting carefully is something that we had talked about and we hadn't implemented, but it kind of taking a step back, and some of those projects that we were exploring that were maybe kind of pushing the envelope, if you will, on the returns. It was kind of on the fringe of whether or not we should do it. Those, just let them go. And I know maybe I have to learn the hard way, but when you watch like investors like Sam Zell and these really top leaders of our industry, and they're sitting and not, you watch their interviews, they're not doing a ton of deal making. They're waiting for those opportunities. They're not in a hurry, because when the time is right, those guys move, and they move quickly, and they make a tremendous return. So I think instituting a level of, I think just a level of calm to the company. We were kind of grow, but we want to make sure that we're not losing along the way.
How do you manage that when, a lot of investors, their livelihood is around finding the next deal, raising capital, working with investors, and trying to move money in the market. When there's some leaders in industry that are holding off and patiently waiting for the next big thing, how does that affect people that are waiting for the next big thing when your livelihood is around right now?
Thank you for summing my point up a lot nicer than I did. The thing I could say to that is keep the overhead low and structure yourself so that you don't have to be one of those people that move capital and just taking money to take money because it's there. I think people respect you more if you say, hey, I don't need your money right now because I don't have somewhere to put it. I will call you when I have something. That person most likely will give you 10 times the amount that they were originally going to give you because you were honest and took it when the time was right. But and a second to that, the overhead. I think setting yourself up with in-house overhead can really drive the bus on some decisions in other companies because they just need to get that deal closed so they can make payroll. And that's a tough place to be because maybe you're not making the best decision making. So keeping some cash reserves to make sure that you're in good shape and not keeping that overhead. Maybe going third party on some of those those administrative tasks that can really cost a lot more if you have them in house.
For the new investor that's looking to get into the space, do you recommend maybe they should be holding off until that next big thing, or should they be actively going out there and trying to find a deal and presenting that to investors?
Yeah. So as far as starting out, there's always a deal. You're just going to have to look harder for it. That's what I would recommend. Starting, get started. Definitely get started, but you don't pull the trigger on the first house you walk through, or the first apartment building you go through. You have to go through a lot of them. You have to really get the numbers. You have to really, take a deep dive and pass on multiple investments. I mean, I remember passing on countless investments before I got into my first one, and I had the options of many foreclosures at the time. So in today's market, I think we all just got to work a little bit harder, and it could take months or half a year to get something on the books. And I watch some of my mentors even who are really good at this, and they have channels for sourcing deals from brokers all over the place. They're looking at, there's no magic pill out there. If it was easy, we would, everybody would do it. So you just got to keep searching, and they're out there, but certainly don't wait. That would not be the advice.
You strike me as somebody who's read a lot of content and just great books. What would you suggest that our viewers take a listen to or open up and read?
Yeah. So I just read What It Takes. That was a great book. It's not quite real estate. It's not 100% real estate, but yeah, as far as other books, as far as when you get started, everybody does talk about reading Rich Dad Poor Dad. I think that's a great baseline. You can read Sam Zell's book. That's just a phenomenal read. I think I've read that like twice. I would just keep reading in general. It's a great tool to learning. And if reading's not your thing, jump on these type of podcasts. Your guys' content. There's a lot of other good people out there that can just keep giving more information. You're going to hear stuff you don't agree with. Let it go. You're going to hear stuff that you never thought about, and keep that in the back of your mind.
If you could go back and start from scratch, what would you do differently?
I would probably I would have focused solely on multifamily, and I would have focused on building just the investor base around multifamily earlier on. So if you're just starting, you're lucky because you have that ability. I got into commercial. It went well. I mean, I made good money in commercial, but it's just not my bread and butter, and it's more risky for me. So if I could have gone back and done it again, I probably would have stayed in multifamily. I started a construction company to do a lot of the renovations. Probably would have cut that out as well. It's just, again, trying to take on too much and do too many things. I would have stayed right in my lane with multifamily, hired the contractors in. Maybe it's a little bit more expensive. It's okay because you're on to the next deal faster. And, you're not getting bogged down with too many details. And, our company is going to be really, really lean and really focused on a robust multifamily portfolio. And we're going to get really good at it. And I know we'll be a good player in the market. And that's where we want to be. We want to fight on that, on that field every day. And I don't want to take on a different field that we're not set up for.
Nice. And so what's the next thing for you, Nick? Where's your project with the Ross building right now, and kind of what are the next steps for you?
Yeah, so we should be getting started here in the next month or two, and then construction will be going. We have to finish up a little bit of a tax credit that got some loose ends that we got to finish up. So we'll get started on construction, and then next we're on to more multifamily and looking in other markets. Salisbury is a great market, but want to take on several other opportunities, and hopefully 2021 is clear of COVID and we can all stop talking about how that's going to affect the industry, because realistically, I think this is going to be behind us at some point, and long-term thinking is, I think, what's going to prevail.
And what's the one thing that you're kind of looking for right now in your business?
As far as the next properties, we're looking for about a 50% split between heavy construction and a lighter construction. Earlier on, I had said we are really focused on that heavy construction. We want to build up a little bit of speed on the other side. Now, unfortunately, a lot of people are looking for that exact asset, and those are the ones that typically can close faster. But it's got a lot of competition. So we're looking for somebody who is an owner of a property we can maybe work with directly, that maybe it's been in their family for a while, and we can really come in and turn the property around and do some light repairs and better management and get a nice asset, hopefully by mid next year.
Awesome. And do you have any parting words or wisdom for anybody that is listening to the show that maybe you wish somebody told you?
It takes 10 years to become an overnight success, and we all just have to keep going and just get started. Yeah.
Awesome. And what's the best way people can get in touch with you, Nick? If they have any questions, if they want to work with you, how can they get connected with you?
Sure. My email is nick@simpsonbuilding.com. I'm quite responsive, and I look forward to talking to you.
All right. Well, appreciate it. Thank you so much, Nick, for taking the time. And until next time, deal makers, talk to you later. Hope you all enjoyed this episode. If you did, please go on over to iTunes and leave us a review, as that greatly supports the show. And if you'd like to be able to connect with John, the community, and I, then come and join us on our Facebook group, the Multifamily Success Network, where you can connect and make deals with other multifamily investors. Go to multifsuccess.com/community.